And we are live. What's up, guys? Welcome to Fresh Podcast. We are here with Collin from Noble Gold, man. We're going to get right into it, man. No intro, just going to get right into it. We're a little bit behind schedule, so I want to make sure that we get the most information to you guys, obviously, with what's going on in the precious metals world, the news, and kind of give you guys an update of what's going on. Collin, welcome to the show, man. Can you introduce yourself to the people that might not be familiar?
Yeah, Collin Plume, CEO of Noble Gold Investments. We've sold over $2 billion in gold and silver the past 8 years. Also CEO of My Digital Money, our crypto trading platform. So I would say expert in alternative investments, someone that's been watching money for a long time, where money's going, what's changing. Own a lot of investments, similar, real estate, different things. So hopefully we'll get into some fun stuff today and break down what's really going on behind the scenes in the economy.
Awesome. And guys, this is live. This is not pre-recorded, chat. So you guys can go ahead and get your questions in. Please get your question actually, because you have someone here that can absolutely help you guys when it comes to precious metals and alternative investments. You guys know I'm really heavy into real estate, which, actually perfectly segues into the first thing we're going to talk about, which is the housing market, right? Collin, you want to kind of take that? And guys, get your questions and we'll answer them as the show goes through.
Yeah, for someone that I was in commercial real estate for many years, own a lot of real estate. It's something I'm looking at. I believe in tangible investments. That's basically what I've built my wealth on is precious metals and real estate. And the market is just, for the last few years, I've just been watching it so closely just to see if there's any moment that we're going to see an opportunity for people to get in and buy. And it just seems, and I'm sure you talk about this a lot, is it doesn't seem like there's any opportunity for young people today. I mean, this Apollo Group report that just came out is quite telling. And you just got to look at the stats. The average first-time home buyer is 38 years old today. Used to be 30 years old back in the 80s. In the 60s and 70s, it was younger. It just keeps getting older and older, because it becomes more and more difficult. And then the median age, so this is not the first-time buyer, but just the average age buyer of a home today, 56 years old. So that, if that doesn't tell you what is wrong with what's going on today, I don't know if there's any other stat that could lead you to that. But unfortunately, it's becoming so difficult. And unless you have family money or inherited or somehow you've come into a lot of wealth, the American dream is becoming much more unattainable. And from an investment point of view, I don't even think, if you could at this point, I don't even know if it makes sense to buy it. Because I do believe, based on the numbers that I'm looking at, that we're going to see a massive correction in the housing market. I think we're going to see some pretty big numbers pulling back, and I'll get into the reasons of that in a little bit. But what are your thoughts?
Yeah, no, I closed on a deal yesterday, but finding real estate deals is significantly harder than it was 2 or 3 years ago. Before, the problem you had was people were over competing for the houses because the interest rates were low. Everyone was rushing to try to buy a house. Now, right. The interest rates are very high. I think I ended up closing mine at around 7 or 8%. And for a lot of people, even as an investor, if you buy it as a first-time home buyer or as a, going to reside in it, it's still going to be around 7%. So that's just really high. And then the median house, I think we were discussing before, somewhere around 400,000 to 500,000 now in America, right?
Over 400,000, and
that's crazy.
I'll tell you why I think there's more pain to come.
Yeah.
And listen, you buying that house, like, obviously you're in it for the long term. You got capital to cover, and I'm sure you're looking at, this could be a big, 3 to 5 year hold or longer.
But for the average person, it's definitely hard. Like I, for me, I'm over here competing with people that want to buy it. People that might want to just buy it to live in it. It's going to be harder for them to get that property than someone like me as an investor. So,
correct.
So no, it's definitely the market has changed a lot, and it's a lot of people are not able to afford the homes because they've exploded over the past couple of years thanks to the low interest rates from a couple of years ago with the pandemic. But sorry, what were you going to say?
And a lot of people, the thing you have to think about, and the reason I'm concerned is that, and Robert Kiyosaki and a lot of people have talked about this. He talks about it in his tweet that we're going to talk about in a second. But the thing that he talked about is what happened over the last 2 weeks, and that the U.S. bond, the treasury market came out, and there was no buyers. There was no buyers of U.S. treasuries. And so the Fed had to come in and buy those. And people aren't, I think if you read between the lines of what's happening, that's a really scary thing for us as Americans because our bonds are supposed to be the safest in the world, right? So, and there's always buyers of bonds. There's investment funds, there's endowments. They need to buy these things. They have liquidity, and they basically stonewalled this auction of U.S. treasuries. And so you saw the 10-year treasury note go up over the last 2 weeks. And Robert Kiyosaki gets into this a little bit more. A lot of people that are watching the bond market are really concerned that the 10-year could continue to skyrocket. Now, in Japan, what they've been doing for 30 years is that the government just continues to buy because when there's no buyers, they'll just come in and buy them. We're not at that point yet, but we could be. We could be. So in essence, what we would be doing is selling debt, and then we would be buying it, our own debt. So it'd be like you having a credit card, and then you come in with another credit card to pay for the other credit card, right? Mm-hmm. That's in essence what happened a few weeks ago because we had to buy those bonds. And part of the reason that we're seeing this happen, and it's such a dramatic change from what we've had a few years ago, is that when you look at the markets, you look at what's happening overseas in China and all these countries that are buying our debt, they're not buying our debt anymore. They're buying gold. I mean, the proof is in the numbers. I mean, you've seen the central bank buying of gold. It's been over 1,000 tons a year for 3 years in a row. Once their debt comes due, they're moving in a different direction. They're buying gold or different assets. So, once you pull these big buyers out of our buying pool and they don't want to buy, and think about this, the thing that's really scary is like these are notes that are in the high fours. We've been selling bonds you take it the last 2 to 3 years, we've been selling U.S. treasuries in the 1% to 3% range, and they were getting bought like crazy. I mean, there was no slowdown in the buying of our bonds. So right now, 2 weeks ago, U.S. Treasury releases bonds. Nobody buys them. The Fed buys them, which is in essence like a quantitative easing. But we're buying our debt with other debt, and so that is that trickle down effect that we could continue to have. Is basically what we're doing is we're devaluing our money, right? We're just printing more money to acquire the debt that we need to sell, and we have to sell this debt. We have no option. We're completely insolvent.
Can you
this is a pretty scary thing that happened over the last few weeks.
Real quick for the audience, because I know we got a lot of younger guys here that might not even know what bonds and treasuries are. Can you explain what they are real quick? I know you had talked about how stable they are and how they've always been, stable for people that want consistent growth without really being too volatile. But can you explain what bonds and treasuries are just so they understand?
Yeah. So in essence, the government sells bonds to investors to continue the debt that we're in, right? Because obviously the country's $37 trillion in debt. So we need to continue. And it's something that we've done for a long time. We've always sold. There's different types of debt that you can buy. You can buy corporate debt. So you could buy debt of a company. You can buy, obviously, U.S. debt. You could buy local debt. You could buy it like where you are in Miami. You could buy like a municipality debt. You could buy if they're like, let's say they need to raise money to put in a new road or do something, they'll actually issue bonds in a specific city. And all of the debt besides the U.S. Treasury debt it's a little bit riskier. Everything gets a little bit riskier as you get away from us, the government. Our debt is supposed to be the safest because we're the world's reserve currency. We've never defaulted on it. So in theory, we should be selling these bonds very easily because it's the safest. And actually, if you look at historic returns over the last 30 years, a high 4% return is not bad, right? And this is basically, if for people out there just saying you can get a high 4% return on a 10-year note. So you put the money in for 10 years, you're going to make almost 5% with, in theory, no risk, right? But now what's happening, because Moody's downgraded our credit, the U.S. credit, they came in and said, we've spent too much money. They downgraded our credit. So when these bonds hit the market, these typically bonds that would be gobbled up by the world, by investors took a seat and said no, because they believe that these bonds were going to get better. They think that we're going to get in the 5s and the 6s and the 7s. The problem with this is that our 30-year mortgage that everybody goes out and buys, and a lot of debt, like consumer, like, when companies are looking to get debt, it's typically tied to the 10-year treasury note. So if the 10-year treasury note goes from the high 4s, which it is now, to let's say 6 or 7 or 8, that means the mortgage that you just got at 7% is actually going to be closer to about 10%. And just imagine the pain that we're going to see in the real estate market if the 30-year mortgage goes to 10%. I mean, that means that, it's unaffordable right now. The mortgages, they're basically double than they were like 3 years ago, right? I'm sure you bought a few places.
Almost triple.
Now we're going to go even triple or quadruple in terms of what the monthly mortgage would be, which means prices are going to drop significantly. That means we're going to see 30, 40, 50% pull down in the real estate market. And for a lot of people, that's going to be a lot of pain for them, for people that bought houses over the last 5 years that can't sustain, that they're just going to end up walking away. They won't have any equity. If you bought your house in the last 4 or 5 years, the prices drop 40, 50%, you have no equity. So long story short, if people continue to just balk and not want to buy our bonds, that puts us in a very precarious situation, and that means the real estate market could really fall. So then the question is what other tangible investments could you buy that would be a hedge against that potential real estate fallout?
Yeah, I mean, it's very interesting how with the bonds, right? That's like probably the most safest and most stable. The returns are lower, but it's probably the safest, asset class to get into. Then obviously you go into the stock market, then real estate, then obviously cryptocurrency.
Right.
I always argue is like at the top where it's like the most volatile.
Correct.
Where would you put precious metals in that list?
Yeah, I mean, listen, I'm in the business, so obviously I believe in the stability of it, but let's just take out what I believe. Mm-hmm. So there's a Basel III law, which these are the banking laws that were created after the last financial fallout of 2009. And so basically there's been a number of things that have happened, and these are basically ways to protect the banks. The Basel is basically the international agency that dictates banking laws. And they passed a law 3 years ago that's going to go into effect July 1st. And basically what they said was gold as an investment was a tier 3 investment, which means it was a riskier investment. They determined that gold 3 years ago, which by the way, the banks are well ahead of all this price surge. They say that now gold is a tier 1 asset. So gold is in the bank's eyes, and these are like big banks, Bank of America, Wells Fargo. Now these big banks can hold gold and use it as an asset on their book. So they're saying that gold is equally as safe as bonds in their eyes. This is groundbreaking law that passed a few years ago, and now this is going to go into effect. A lot of people thought they would change it. They didn't. So July 1st this year, banks are going to be able to buy gold and use it on their balance sheet as a tier 1 investment asset, and not paper gold, the real gold. And so they're going to continue to buy gold. So you're going to see all these big institutions, UBS and Bank of America and all these guys go out and really buy tons and tons of gold to put on their balance sheet. So I would say in terms of safety, bonds, you're right, have always been the creme de la creme, right? But I think now the market is sort of saying like bonds are not as safe as they once were. Moody's downgraded the U.S. credit. So I think there's some concern about the bond market right now.
Yeah, and I think the tariffs definitely hurt that as well. Because I know, like you mentioned before, Japan buys a lot of our bonds. I think the tariff situation scared them, and they kind of made the market a little bit volatile. And I think that's why Trump had to pull back on the whole tariff situation a bit.
Yeah, it's been one step forward, 2 steps back in terms of the tariffs. I mean, and I think that's the issue today is that we're running into a situation where we the current administration does want to get manufacturing back here. They do want to make things so they've gone aggressive on tariffs. They want to make it even playing field, but we don't even know what that looks like. I mean, we haven't manufactured anything to a large extent in probably 40 years.
Yeah.
So it's a real reversal of what we've been doing. We've loved buying this shirt for 50% lower than what it would cost to make it here. We love that. I mean, we're just used to that, right? So it's a whole new mindset of what's happening with Trump and this new administration to get people into the mindset of, yeah, hey, this shirt might cost more, but the good part about it is that it's manufactured here, which means there's jobs here, which means there's taxes here, which means that, the income stays here. But there's a shock value of what we have to pay for items. And this is all trickling down to consumer sentiment. Consumer sentiment in the US right now is the lowest it's been in like almost 20 years. People are just, they're keeping their wallet in their pocketbooks. They're not traveling right now. They're very concerned because they just don't know what's going to happen for the rest of the year. And so there's this general fear about the economy and equities. And obviously I laid out sort of the reasons to be fearful of the real estate market.
Yeah. And speaking of which, we were talking about a very big real estate investor, Robert Kiyosaki, a second ago. And I think you had a tweet. I don't know if you want to pull it up, if you wanted us to pull it up now. But can you give us a little bit of background on that? Yeah, we'll pull up the tweet while you talk about it. Go ahead.
Yeah, so basically Robert Kiyosaki, big gold buff, came out and said that he believes that gold's going to hit $25,000 an ounce. For those that aren't aware, gold is sitting at about $3,200 an ounce. So this would be a pretty significant increase. That being said, if you look
and he's a real estate guy, by the way. For those that don't know, he wrote the book Rich Dad Poor Dad. He talks a lot about using debt to create wealth. He's a huge real estate guy. So for him to talk about gold like this, I think that's pretty that's very interesting, very important.
Yeah, I mean, I think he's smart in that he is a real estate guy, owns a lot of real estate, but he also owns gold mines and he owns physical gold and silver, and he talks about it a lot. And in this tweet, he talks about what I mentioned, that the Fed held an auction for U.S. bonds and no one showed up. And then the Fed quietly bought $50 billion of its own fake money with fake money. And so that's the really scary part about our economy now, is that the only way we can keep it, it's kind of like when you get a credit card and then you keep moving to zero interest, and then eventually there's no more zero interest credit cards. Like, we've gone past that point. There's no more credit cards to do it. And so he's saying, party's over. Hyperinflation is here. Millions, young and old, to be wiped out financially. And then he says, good news, gold to 25,000, silver to 70, Bitcoin to 500K to $1 million. And sort of kind of lays out sort of the reasons behind this. And I think,
what's silver sitting at per ounce right now?
I'm sorry?
What's silver sitting at right now per ounce?
Silver's sitting at about $32 an ounce.
So it's going to double.
Now. Yeah. Okay. So he says silver could double, and then this would be 8 or 9 times the current gold price if it hit $25,000 an ounce. And listen, it's a big number, 25,000. But what you have to read into this is that when you look at even gold breaking $3,000 an ounce, I think you and I started talking probably a year ago. Gold was at 2,000, 2,100. And nobody thought 3,000 was anywhere in the realm of possibility, and it moved quickly. I mean, gold this year is up 12%. Gold over the last 18 months is up over 40%. So gold is outpacing any other stable asset that's out there. And I think if you look at historically in the charts, we're in the 3 or 4 years of a bull run. And typically in commodities, you see an 8 to 10 year run. The last bull run in commodities was 2001 to 2010, when gold went from $280 an ounce to $1,900. So I think we're right in the middle of a pretty massive bull run. And a lot of the institutions are talking about. UBS says gold should hit 3,700. Bank of America is predicting 3,500 this year. So there's a lot of the big banks out there that are predicting pretty big numbers for the gold price.
You said something interesting just now that made me think about something. You said gold went on a bull run from 2001 to 2010. And if people pay attention to that time span, that's effectively the war on terror, right? The war on terror occurred in that decade where we made a significant amount of changes to, foreign policy, wars, the national security state that we have now. Would you say that the current conflicts that we have now, whether it's what's going on in the Middle East with Israel and Iran and the proxies, and also what's also going on with Russia and Ukraine. Would you say that we might get the same type of increase in gold because of these foreign conflicts as well?
I think it's a combination of what you just said and a combination of, like, if you look at 2001 after 9/11, we cut rates. There was the war on terror, as you mentioned. This time, 2000, it was like, we got to fill the economy with money, right? Everything was shut down. So government just printing, which is very similar to what happened in 2001, right? We had 9/11 happen, and then we had multiple wars. So we were just spending money like crazy. In 2020, we were doing the same thing, right? The whole economy was shut down. So we were giving people free money. We were paying off people's college. We were spending a ton of money. So we flooded the market with money in 2020 to 2022. Stock market reacted and pulled back. And now I think what it is I think we've transitioned from the COVID and all that spending and all that's been dumped into the market, and we hit $37 trillion in debt. Now we're in a position where it's the trade war, right? So this second cycle, the second few years, is this war on trade and us trying to attempt to level out the playing field. Now, and then you have right now is you have this new tax bill that went through, the big bill. And that tax bill, they're predicting, is going to add a minimum of $4.6 trillion in more debt to our economy. So we're spending a lot of money. This tax bill, there's this big bill, there's no savings in it for us there. There's opportunities for lower taxes, but that, generally speaking, is going to equate to more debt for us as a country and more spending. So you have the Fed that's buying back our bonds. You have this new tax bill that's going to add, almost $5 trillion in debt. So we're just going down the same. We haven't really fixed anything. I know, Doge, the idea behind Doge was going to cut a lot, but I mean, we're talking about, I think they've cut maybe $150 billion off our balance sheet. It's nothing. I mean, we're $37 trillion in debt and growing. Our debt on that 37 trillion annually to cover our debt is almost $1.5 trillion. So that would be like if you had a credit card, that credit card would cost you $1.5 trillion per year. That's our obligation per year as a country. So if you add all these things up, it's like, where's the money going to go? Where's the opportunity? And that's why I think Kiyosaki is predicting this massive $25,000 an ounce for gold, and he's predicting these alternative assets to do really well, because there's just no faith in our dollar or economy or the equity markets or the bond market. So people are going to be looking for these alternatives, and a nice alternative is gold and silver.
It's interesting, Collin, because I was literally talking earlier on my other show about what's going on with Russia and Ukraine, and I talked about how Trump is having a very tough time getting Putin to the table and negotiating something, and he launched a crazy strike, probably one of the biggest since the conflict started multiple years ago. And, they're talking about, we're going to sanction Russia or whatever. But the reality is, I was trying to tell people, was that we sanctioned Russia back in 2014, 2013 with the Crimea invasion. And, they obviously suffered for that. But Putin got smarter and he bought a bunch of gold, right?
Correct.
He holds a bunch of gold. And he did this anticipating that he would at some point invade Ukraine as NATO expansion got closer and closer to Russia.
Right.
And when he invaded in 2022, he knew that sanctions were going to come. He was going to be condemned by the entire international community. But despite the fact that he was condemned, ostracized, and they were sanctioned to hell and taken off of SWIFT, the Russian economy is fifth strongest in the world, if I'm not mistaken. Yep. And I think a big reason for that was he preemptively bought a bunch of gold, knowing that that's what's going to come. So, I mean, if that doesn't prove that gold can protect you from, other countries taking you off SWIFT or sanctioning the hell out of you, I don't think anything else will, because that's literally what he did, was buy a bunch of gold and insulate himself. And now they still have a very powerful economy, despite the fact that, they're running a war, and they've been doing it for multiple years.
And they basically created an alternative trade route, right? It's basically saying, okay, well, fine. We will have the sanctions in the dollar, but we're going to still do transactions. And they 2 years ago did a massive transaction with Iran. Now the BRIC nations are all starting to circulate and trade in gold, and they have this alternative currency out there. And I think you're right. It was the smartest move that they could have done, is to have this, not only do they buy gold at a great price and they'll continue to buy gold, but they gave themselves an ability to trade, because if Russia's, the amount of reserves and things that they have, the minerals that they have, oil, I mean, they're a significant trading partner for most of the world. So they've given themselves some flexibility. And I can tell you this, a lot of people in this country believe that, there could be a change in our currency, there could be a reset. And so if that reset happens, how do they value that new currency? What's going to happen to our currency? So having too much of your money tied into the dollar, and we're spiraling out of control, the debt is absolutely out of control. It gives yourself an option outside of the current system if this system falls apart. And, there's nothing, but we've never seen the debt that we've created. No country's ever been $37 trillion in debt. So we are in unprecedented, uncharted waters. And so it just gives people that buy gold from us, it gives them peace of mind to know they have a little bit of money in an alternative currency that's actually desirable, that people want. And it also can't be manipulated like how we see the manipulation in the dollar and the manipulation in the bond market. And I would say that, listen, this year there's been a lot of manipulation in the stock market because, every time he says, there's a tariff and then he pulls it back, there's a lot of people out there that are day trading and making significant wealth in these massive swings. I mean, we saw the Dow 2,200 points down in one day. For the average person that's not day trading or living on their computer, which is most of us, you can't take advantage. We're missing this opportunity. And it's how do you do it? So what assets could you buy that, okay, I'm going to buy it and hold it for 5-10 years and be able to shield myself from all this crazy volatility. And there's a lot of insider trading and things that are happening. I mean, we know all this is happening right now, where there's people that are getting ahead of this, this Liberation Day. Like, if you really knew what was going on and he was going to mandate all these tariffs, you knew the stock market was going to collapse, right? So there's a lot of these things happening that just the average American can't take advantage of. And that's the sad part about this, manipulation that we've seen in the economy.
Yeah. So what else? So we talked about the housing situation with the costs going crazy. Robert Kiyosaki in 25 ounce. Do you want to talk about the EU central banks?
Yeah. So the European Central Bank came out with a report 3 weeks ago, and they had their top 5 economists, and they really get into why you should own gold. So they talk about, that there's no counterparty risk, that there's a limited supply. So the gold supply only goes up by 1% per year. If the dollar was in the same way, if we could keep the dollar only growing by 1% and with the debt, we would be in a much better position. But gold is unique in that. So they lay out all these reasons of why investors are buying gold. And then they talk about what happened after the election in November. And basically what happened was the derivative gold market, so the paper gold market, went up by 58%. So all the stock traders were like, we're going to see tariffs. We're going to see a lot of volatility. We're going to see gold's going to go crazy. So they bought a ton of derivative gold, and they were right. They predicted, very, very well. Gold from November to today is up astronomical numbers. But what ended up happening, the interesting part of this, and they show this in the charts, is that in January, people weren't satisfied with paper gold. These big institutions, the JP Morgans and the UBSs and all these big companies, BlackRocks, they wanted the gold. And so they started calling in their contracts. We don't want this contract. We want it. And and all these institutions weren't prepared because they've never had this many people. And when you look at the chart from the ECB, you'll see the amount of people asking for withdrawals is the highest it's ever been. And so they show this in the chart. They show that the derivative market to now, hey, we want our gold. And it's very telling that they talk about this. And the ECB, which is basically the Fed of Europe, basically kind of talks about how this whole thing changed and how they started to realize that maybe these institutions don't have enough gold. And you probably saw the reports earlier this year.
So they were basically giving out IOUs with the paper gold. They were just giving IOUs, and they didn't bank on everyone saying, "Yo, I want my gold in physical."
Correct, and it created this pandemonium because people wanted their gold. And to find out that the London Exchange basically said, we don't have it right now, even though in theory they were supposed to have every ounce, every contract was supposed to be backed, and they didn't have it. It was a Ponzi.
Yeah.
And so people started to get more nervous. And these aren't just people, these are institutions. These are groups that shouldn't be nervous. They became very nervous, and they got into a position where they just said, we got to keep getting it. So the amount of institutions that wanted their physical gold is a number we've never seen in history of the paper gold market. We've never seen it, and it continues. And in this ECB, what they slide into the end, which if you read this article, and these are the 5 top economists by the ECB, they basically say, if we continue to see people wanting physical gold, there will be substantial losses. And what they're saying is that these institutions actually don't have enough gold. They don't actually have it. And they say if people continue to want their gold, as long as they stay complacent, they should be okay. But if people continue to want their gold, which I think they have a right to get, that the whole market could fall apart and that there could be an absolute supply shock. And this is in my 16 years doing this, this is the most controversial article I've ever seen, because it's becoming from a source that has no interest in gold, right? The ECB has, I mean, they're in charge of the euro. It would be like the Fed telling everybody like, hey, we don't have gold in Fort Knox, or if you guys want to see the gold, we can't show it to you. That would be the equivalent to this article. I mean, it's so shocking to see this kind of article come out. So I think what it does is it really affirms what I've been doing for a long time, is just saying like, listen, gold is an asset you can own by yourself. You don't have to have a middle person. You can acquire it from us. We can ship it to you. If you want us to store it, we can store it, and then later we can ship it, whatever you want. At the end of the day, you need to buy the real thing. You need to buy the actual gold. Don't buy the paper, because it's really the one asset when things hit the fan that you own. Because when you buy this from us, there's no one else that owns it. There's no counterparty risk. There's no counterparty risk is like, when you buy a stock or something or something else and somebody else owns it and anything can happen. There's nothing like that. This is yours. And so I think it's extremely important for everybody today to have some assets that don't have debt behind it, and also that you own by yourself, and free and clear of the government, free and clear of institutions. It's going to become more and more important to own things. And you've seen this all over, and you're an owner of assets. Like what you read out there is just buy this stock, or just buy a derivative, or just buy this, or you can just buy a portion. You don't need to do that with gold and silver. You can buy the whole thing, and it's gonna save people down the road. They're gonna be saved by owning assets, because the way the economy is going is that the institutions, the World Economic Forum, all these groups, they don't want you to own anything. They want you to just lease and rent and do all this stuff. And the reason is they want control, because ultimately whoever owns the assets wins. And so if you don't own assets in this economy, you're going to have a rude awakening in the next few years.
Yeah, no, that is so true, because I mean, millennials, and I got to blame my generation for this a little bit. Millennials and Gen Zers and Xers and everything else like that. Like, we were okay with just renting and not owning
Correct.
things. And basically what's happened now is things have spiraled out of control. We got the highest, median income. I think 403 is the median price for homes, looking at your notes here. And that's crazy, man. I mean, our parents bought houses for less than $100,000. So
yeah,
for it to be, 5 to 10x is absolutely crazy. And, most people nowadays are like renting. They're paying a bunch of money to have an apartment in New York City or one of these like metropolitan cities, because everyone wants to dream of living in a major city in the United States, and they don't own anything.
Right.
So I do think that, at least with the gold and the silver, if shit hit the fan, you have something that you can actually barter with real time, because, precious metals have been around for centuries, since humans have bartered, right? Precious metals have been used.
Yeah, and also if you think about it, the nice thing is, and this has happened for a lot of people, and I actually was interviewed by an influencer on YouTube that I've been advertising with for many years, and he bought gold for me, and we paid him in gold for years, and his YouTube channel got demonetized. Mm-hmm. I don't know if you know this guy, Next News Network.
Okay.
But he's been big on YouTube for a long time, and he was actually our first influencer that
just
we
like
sponsored.
us, demonetized. So annoying, huh?
I mean, it's terrible.
Yeah.
It's absolutely. So he got demonetized for a number of years, and for about 2 years, and so basically his income dropped to really low. He had advertisers like us, but like obviously he was making money. He had like 30 or 40,000 videos that he'd make a little money on, and so he's doing quite well. They demonetized him, and he was looking for ways to sustain himself, and he didn't want to, but he had to sell some of the gold. And he said in the interview today, he was talking to me about it. He's like, if I didn't have that gold, if I didn't have it, which I had no debt behind, I owned it by myself, I might have not been able to survive this demonetization that YouTube put me through. And so, that's the thing too, that's nice, is that there's people today that bought gold from us years ago that, yeah, maybe they see an opportunity, or they have to fix their roof, or they got to pay their mortgage. Like, this coin, this is a mortgage payment, right? I mean, so they have this disposable, income that's available to them because they bought gold. So I think as you think about your future, there could be a chance where you go, you know what, I need money, or I need to get this fixed. And so you use the asset the gold that he bought from us has doubled. So he was able to liquidate it and just kind of keep the lights on for a while. And he told me he was able to pay his staff, and he was able to survive until he got monetized again. So it's these are the other reasons that you want to have debt-free assets. You just don't know what's going to happen, and you need to have some liquidity there. And that's the nice thing about gold and silver, is that they're liquid. It's liquid anywhere in the world.
No, absolutely, man. It's when shit hits the fan. I remember we had Robert Kiyosaki in our show, and he literally said it like, "Hey, if things happen, doomsday, you hold the gold, then you trade the silver." So precious metals definitely. I think it's a class that not a lot of people pay attention to, especially young people. They think, "Oh, what? My grandpa has gold. Like, who does that?" And it's. I don't think they understand the importance of it, and especially with the way millennials are, where they don't buy anything, they don't like own anything. At least this is an asset class that you can quickly liquidate if you need cash quick.
Absolutely, yeah. And so we created so we do gold and silver IRAs, 401k. Anyone's got an IRA or 401k. We can help you. You can put that in physical gold, and it's the real thing. We help you with the paperwork. You buy the gold from us, but it's yours. So you own the assets. It's not a fund. We've been doing that. I started Noble Gold about 10 years ago. I've been doing it for 16 years. We've done over $2 billion in gold and silver sales. So we've done a lot. You can check out our reviews. But we created, if you don't have an IRA or 401k that you want to do, we've created a fresh and fit package, starter package. And it's really cool. So it's for just around $5,000. You're going to get, this is a St. Gaudens coin. So the nice thing about this is that if you go back 100 years ago, this $20 gold piece is what people use this to trade and barter with. They would buy $20 100 years ago. You could take your wife out to dinner. You could buy groceries, and you'd still have money left over with a $20 gold piece. To give you some idea of how the dollar has fallen. I know people like today are like, what do you mean a $20? I mean, you could trade this $20 for $20 too, but $20 in gold would pay a lot about 100 years ago. So this is in the fresh and fit package, the 5,000. You get this coin. It'll be graded. So this is a high quality. It'll be an MS63 coin. So you'll get this gold coin in the fresh and fit package. And you'll see, I mean, the condition is incredible. Just to think that 100 years ago that someone had this in their pocket and that they were living on this, I think is pretty fascinating. So this is part of the fresh and fit package.
Does that account for purity or age, or the MS63? What is that?
So the quality. So in essence, the grading, you can go really far down to like VF or even below, which would be very fine. Those would be coins that'll be a little bit rougher. For a 100-year-old coin, the top grade would be MS70. That would be like the best, highest quality. You're not going to find an MS70 in a 100-year-old coin for the most part. Very rare. Usually you see the higher grades of this 100-year-old coin would be anywhere from MS61 to MS66. MS66 in this coin would probably run you like close to $10,000.
Wow.
So this is a lower grade, but a very high quality. It's hard to see on the camera here, but this is you're going to be shocked. Whoever buys this will be shocked by the quality of this coin. I mean,
So
it's very
MS63,
clear.
and the highest like that, which is rare, you said, is a MS70. So
70, yeah. You don't really see those kind of things in 100-year-old coins because it's just, these are coins that were in circulation. Like people had these in their pockets, and gold is a soft metal, so it's going to have some scratches, but for the most part, you're going to be blown away by, the look and feel of this. So it's really cool to have a piece of history that you can put in your portfolio. So you get an MS63 coin. It'll be different dates, but it'd be anywhere from the, early 1900s to 1930. You'll get a silver American Eagle proof coin, which is a 1 ounce silver coin. Comes in a velvet case. It also has a certificate of authenticity, so you'll get that. And then you'll get 20 ounces of the silver American Eagle, which is the most popular coin. You'll see these coins are MS, typically are going to come out close to MS69 or MS70 because they're basically perfect. So modern day coins you can get in this higher grade, but you're not going to find many in that higher grade for older coins. It's just pretty rare just because they were in circulation. But yeah, it's the fresh and fit starter package. So for $5,000, you get some gold, you get some history, you get some silver, and it's a good split to get someone started and investing in precious metals.
I'll tell you this: I spent like 8 to 10K just buying silver, and I didn't get as much as that or gold. So that's a pretty damn good deal to get in. And guys, honestly, if you get that, then you're pretty much set. You don't really got to buy any more precious metals if you just kind of want to have something and just so that you want to diversify. That's a great way where you can kind of enter in, get your gold, get some silver, put it in a safe, forget about it, and if the rainy day ever comes, you just have it there. Because when I went ahead and I bought my first, amount of precious metals, I spent like 8 to 10K roughly on silver.
Yeah.
And I didn't get any gold, right? And I kind of looking back, like I wish I had some gold because gold is obviously worth a lot more and it's going up. So
yeah,
this is a great way to get in, guys.
If someone wants to spend a little bit more, you can get, what we'll do is in the rare coins, you can get the $20 gold piece, you can get the $10 gold piece, the $5 gold piece, and the $2.50, all in the same grade. And that whole package together would be less than $10,000. And that's a really cool set because that's all the coins that were in circulation. So you get a $2.50 gold piece, a $5, a $10, and a $20, plus all this silver for a little bit less than $10,000. And that would be like the really cool. And if you think about it, that's what a person 100 years ago would have in their pocket.
Yeah.
They would have those coins in their pocket. So if someone wanted to spend a little bit more and get that whole set, they could do it, or they could just go ahead and start with the starter package. Some people have.
No, that's a fantastic starter. I wish I met you a couple years ago, man. Like I literally spent a whole bunch on silver and didn't get any gold, and that's not even.
Well, last time I saw you in person in Miami, I had that kilo bar. You could have bought that for me. At the time I saw you, the kilo bar was worth like 68 or 69,000.
Yes.
And now it's sitting above 80,000 today.
Wow. Less than a year.
Yeah.
Wow.
Yeah, I tried to sell it to you, but you didn't want to buy it.
No, you didn't want to sell it to me. I did. I was asking you if I could get it. You were like, no.
Yeah, you're right. You're right. I didn't want to sell it.
I wanted to get it. You said no.
Next time I'll sell it to you.
Yeah, you didn't want to sell it to me, man.
Yeah.
I was like, hey, could I get this thing? And you were like, no. So, yeah, man, no, but I think, guys, and here's the thing, man. I'm a real estate guy. Robert Kiyosaki are real estate guys. You need to get yourself into some precious metals, man. Again, I think $5,000 is cheap and a great way to kind of get in so that you can put that in your safe and you have it no matter what. And it's really an insurance policy, man. I always tell you guys, have a good amount of cash that you can liquidate anytime, but having precious metals is another thing that you could do. Question for you, though, Collin. If let's say they buy this stuff, right, and they want to sell it quickly, maybe, a family member needs surgery or they need some access to cash quickly, how should they go about selling it?
So the first thing I would always just ship it back to us. Frankly, we're going to give you the best price because you bought it from us. If you can't do that, then the other option would go like locally and to try to sell it. But most of our clients, that's the beauty behind us and Noble Gold, is that you want to make sure that you have a dealer that you have a two-way street with. Because like, for instance, right now, everybody's like buying from Costco because they think it's a great deal. Well, Costco doesn't buy back gold. So when you want to liquidate, you got to go find somebody, and who knows what you're going to run into out on the market. So With us, we buy it back at the market value. You're going to get a fair price. We're going to liquidate it and get it to you. Also, I sell these all the time. You know, the problem with people a lot of times is they buy from a dealer and they buy some crazy coin that nobody wants, and then they try to sell it and they realize, well, yeah, nobody wants to buy this thing. You got to buy items that people are buying and selling, and buy from a dealer that's buying and selling all the time. So yeah, I'm fine. You come back and sell it to me. I'm going to buy it back and sell it to somebody else. You got to be careful. So I think the biggest thing is buying from a reputable place and making sure that they have a liquidation process that makes sense for you.
Yeah. No, I mean, that's super important, man. I mean, being able to buy from a dealer that will buy it back and, is it going to rip you off? That's, worth its weight in gold, so to speak, no pun intended. So, no, very important. Cool. Was there anything else? I'm trying to think here, make sure, because I took some notes here if we missed
No,
anything.
I think if anybody had questions,
let's hit questions. Do we have any, Bills? Okay, let's see if we can hit some of these questions. Guys, if you got any questions on precious metals, man, please get them in. Like I said, guys, you don't got to make a decision today, but, we're just kind of putting this in your head, letting you know what's going on here. The fact that we bought back a bunch of bonds, that's scary, dude. That's scary.
Yeah.
Speedy says, if you're a person that doesn't know how money works, then what are some books to help you get started on how to learn how money works? Oh, perfect question to ask. Go ahead.
Yeah, it's a good question. I mean, I always say, when people ask me this stuff, I think the number one thing is you need to figure out how to make money before you think about investing. I see this all the time. People come up to me and listen, you got to learn how to put some money away and sock. You got to put $5, $10, $15, $20,000 away. You got to find a career that you can find an arbitrage or a way to make money. I wouldn't even think about getting into any investments until you have a career where you can make some money and sock it away. Once you're able to sock some, that would be my number one goal. Figure out a way to make a decent living. Figure out a way to put money away. Figure out a way to not spend everything that's coming in. Once you get $5, $10, $15, $20,000 aside, then you can go out, you can read my book, Silver's the New Oil, or you can look at these investment books. The number one thing is you got to get enough money, as you know, put away, and then start thinking about, find something you're really good at, make a career. That would be the first thing. Don't get caught up in investing before you don't even have any money to invest.
Yeah, and it doesn't benefit him to tell you that, by the way. Like, you should be telling you, just buy my silver, buy my gold. But it's like, no, find a way to make money consistently. Then once you have some money set aside, then you can invest. So what do we got here? We got Colonel says, cap rates and multipliers are ridiculously bad besides the equity, which is unpredictable. What is the real point of dealing management headaches? Buying a bond will pay the same without the downside.
Well, I mean, listen, that's not true. I mean, as a real estate investor, that the right property will appreciate substantially more than a bond.
Absolutely.
I mean, yeah.
Absolutely.
So I don't agree with that. I think that right now, maybe the thing that he's saying that's accurate is that maybe you can't buy real estate at prices that make sense.
Yeah, you can't. Yeah,
so you should wait. If you can't buy it and get a return, or you don't think there's significant upside, then just stick it in bonds or buy gold and silver, and just wait for things to happen. But to say that bonds are gonna pay more, long term than good real estate is just, I don't think there's. I mean, if you look at some of the biggest billionaires in the world, they made it in real estate. So
yeah. Bonds is like a safe way to put your money in where you don't got to worry about anything. But it's like at the end of the day, the growth is so slow and
yeah, correct.
What else do we got here?
If I have an inheritance of 50K, so then what are some things I should invest in to grow my money? If I'm an average guy making 35K a year, also how much should I start before I start investing in precious metals? Well,
good question.
I mean, listen, you're going to have to put that money somewhere, that 50K. And I would say the first thing is that how much of that money do you need? If you don't need that money, then maybe looking at our starter package of 5,000 is good. I would say you should have some diversification. But ultimately the big thing is that you want to, with any investment, you want to be able to hold it for 3, 5, 10 years. So if this 50K that you have is, you need it for whatever you need it, you're going to need it. But if you can sock some of it away into some investments, like, buying a $5,000 gold package and socking it away and sort of
that will hold value, unlike the 50K cash won't hold value.
Yeah, it's not going to, in the bank, you're not going to make enough, and people, talk to me, they're like, oh, why don't I just put in and make 4% on my money? And, it's great. It's like, well, gold's up 12% this year. Gold's up over 40% over the last 18 months. Who cares about 4%? If the bank's paying you 4%, there's a reason. They can go out into the market and invest it and make 10, 20, 30. The bank's not in the charity business. They're paying you 4% because they can make 15 or 20% in the market or other places. So yes, it's safe and maybe you need to do that. But I also think that there's a point where you do have to get your investment out there to make a return. I mean, as you know, like you just bought another piece of real estate, like you need that money to work for you, and it's never going to work for you in bonds. Bonds are like when you're like, last 10, 15, 20 years of your life and you're just trying to wind it down and you just want it in something safe. But if you're young and you're looking to grow, you cannot retire on 4% returns. You're never going to get there. You need double-digit returns to survive because inflation is going to eat you up. And so you have to find opportunities out there. So I think it's, listen, give us a call. Maybe gold and silver is right for you. Get our guides, learn about it. It may not be, but ultimately you can't live on 4% bond money because it just, in the world we're in today, the cost of everything is going up substantially more than that. And you need to be able to keep up.
Yeah. What else do we got here? That's it? Oh, okay. I haven't got that one. Can someone who doesn't live in the U.S. buy gold from you? If not, is there anywhere you would recommend for international people to buy gold from?
I don't have any recommendations. We only sell gold in the U.S. And the reason is that every country has a VAT tax, so they tax it. So if I shipped it to the U.K. or if I shipped it to anywhere, they're going to tax it substantially. So we don't do it. It just doesn't make sense for anybody. If you want to buy gold and store it here in the U.S., which a lot of investors do because it's, they feel more comfortable storing it here, we can do that for you. We can store it in Delaware, Texas, or in Canada. So we can store gold for people living internationally, but at the end of the day, you typically want to buy in the country that you're in because you're going to avoid a lot of tax doing it that way.
Bam. All right. Two more. Noble, do you think this she economy has had a huge effect with lack of investments in the U.S.?
I don't know what is that? I don't know what is that? Do you know what that is?
He's basically saying because women are the majority of consumers in the United States. So he's saying, does that have an effect on investments? No, bro, because women don't invest. All right, who's next? All right.
Yeah, I don't know.
Okay, what about gold jewelry?
One of the worst investments that you can make is gold jewelry.
Can you
jewelry
explain that to them real quick? Because they're going to think
typically just a terrible investment. Massive markups on liquidation. Most gold jewelry is 14, 18 karat. This is an older coin, so it's 22 karat. But most of the bars we sell are 24 karat. And the reason this is 22 karat, because people are like, why should I buy it? Is that gold is a soft metal. So 100 years ago, if you wanted to walk around with gold, you wouldn't want a 24 karat gold coin because it would scratch and scuff. So that's why they sold 22. That's why gold in circulation was 22 karat. Gold jewelry is one of the worst investments you can make, except if you think it's important for you to do that to make your partner happy. But
Gotcha.
But otherwise than that, it's not a good investment.
There you go. If you guys want gold, buy the actual stuff, not the jewelry.
Correct.
What else do we got here? That's it? Okay, one more that just came in just now. We'll get you out of here, Collin. I know you got a busy day.
Is there a benefit continuing buying precious metal like a 401k or just buy flat value and hold it for the rainy day or need it? Yeah, I mean, a lot of people lost jobs or have old 401ks. You can roll that into a gold IRA with us. So basically, it moves from that 401k and stocks into physical gold, this stuff. So we can do that for you with any old 401k or any IRA investment, or you can just buy it directly. We do both. It doesn't really matter. We find a lot of people have money in those 401ks, so it might make sense. And also, it's a good way to diversify because if you have an old 401k and an old job, you can roll it into gold and silver. So you got that gold. And then your new job, if it has a 401k, is going to be in the stock market. So it's a good way to hedge your bet and to have multiple investments without really having too much to think about. So I would say any old 401k, give it a shot in gold and silver so you have some diversification within your own portfolio. And it's just a smart thing to do.
Bam. All right. So, man, that was very informative, man. We went through a lot of things there. Colin, where can the people find you if they want to get your book? Where can they get it? We could put a link below as well if you guys want to get the book, because some of you guys might not know enough.
Yeah, if you just contact Noble Gold Investments, we can give you access to where to find the book. It's on Amazon. It did hit #1 in the commodities section in December of last year, which was amazing. My first book out of the gate. A lot of good information there. But overall, I would just say call us if you're looking to get information. We can get you started with the starter package. And, you could get this gold in your hands in a week. And silver. So this is liquid. This is there. And I say a lot of times with investments, it's good to just get into something, like get it in your hands, sock it away, and then focus. As the first question was, you should be focusing right now on how to grow your wealth and really grow your career. And as you get money, put it away in investments and forget about it. And I guarantee you, Kiyosaki is going to be right. 20 years, we're going to see gold at, $15, $20, $30,000 an ounce. And you'll be happy and you'll go, wait a minute, I saw that crazy guy who's, talking about gold at 3,200 and now gold's sitting at 15,000 or 20,000 and, they feel pretty good about it. Silver sitting at, $300, $400 an ounce. So it's one of those things you just buy it, sock it away for a rainy day. And in the end, you'll be happy that you did, because the debt that we've created, the dollar devaluation, all that's happening in the world, it's not going anywhere. We're not going to pay off this debt. It's impossible. So it's just a waiting game of when the economy will collapse. And when that happens, real assets like gold and silver will perform very, very well. And you'll be happy that you took advantage of this opportunity.
Okay. One last chat just came in just now. A guy named Austin, he has a question. He says, so I have 7 ounces of gold, 422.744 ounces of silver, I think. But he has bars, kilos, and coins, 5.2K in crypto, 3.6K in stock, and whole value life insurance policy. He says he's a Native American, so he gets $2,300 given to him pretty much free every month. Should I go for a 2-family in the future, 10K in savings and 1.8 cash? Any tips? You're going to need more to do a 2-family, bro, unless you live like in the middle of nowhere. But I guess since I got Collin here, what do you think about his gold holding? He says he has 7 ounces of gold and 4.22.74. Goddamn, just like really put the whole thing. I'm assuming that's maybe, I don't know if that's ounces or grams.
So he's got like, I don't know, 24,000 in gold. He's got 422. He's got like 14,000 in silver. So 2013. So he's got 37,000, but it's got about 42 different stocks, 42. So he's got close to 50 grand in assets, and he gets, 2,335 tax free, which is
every month because he's Native American.
That's like making like what? That's like making like 40,000, like almost 50,000 a year with taxes.
Yeah. He's getting he's getting free money because he's Native American.
10K in savings. So he's got 52 in investments, 62 cash. Yeah, I mean, I don't know how old he is.
25.
How old is he?
He's 25.
25. This guy's doing great. I would just say that's a great thing to do to continue to grow. What's a 2-family in the future? What does that mean?
He wants to buy a duplex, but that depends heavily upon, where he's trying to live. I mean, 10K in savings, bro, you're not going to be able to get, you're barely going to be able to get a duplex unless you live in the middle of nowhere and the house is worth nothing. But I mean, hell, bro, with that, I mean, you could definitely, with that 2,300 you make a month, you can go ahead and take advantage of this deal. Since you're getting free money like that, you can save that money for 2 months and go ahead and get this gold package deal with the silver.
Yeah, I mean, I think this guy Austin is doing great. He's got some diversification. He's got some savings. Like, this is the kind of stuff that I love to see, honestly. Like, this guy's got a good head on his shoulders. I think like he's in a good position. He's in a stable position. I think the next thing is like finding that next big opportunity to like really make some money, like to really kind of grow his portfolio. But if he continues every year to just add an ounce of gold, add some silver, add a little crypto, and then, I would say 3 or 4 years, look to buy that duplex. Like, this guy is going to be in a phenomenal position. Guaranteed this guy retires with, probably $4 or $5 million net worth minimum.
Yeah, for sure.
And he's going to be living really good. So it's great to see this stuff, and my hat's off to you, Austin. I think you're going to do great.
Cool. Collin, thanks so much for coming on the show, man. It's always very enlightening whenever I talk to you, man. And I'm just like, holy crap, getting news with the financial world. Guys, go check him out. His links are all below, man. I'll give you the last word, bro.
Yeah, Noble Gold Investments. We're a friendly company. We're family-owned business. You're going to talk to, a real person, not a bot. You're going to talk to a friendly person if you're looking to get good information. But I think it's always good to start your journey. We got this $5,000 fresh and fit package, or if you have an IRA, we can help you. But yeah, it's a great time to start, and it's never too early to start investing. I think the biggest thing that I would tell people is like, start to make some money, grow, and then start to think about investments. If you can start in your 20s and 30s, by the time you're retired in your 50s, 60s, and 70s, you're going to be in a great position, and you'll sleep better at night, starting this journey. So appreciate you having me on, as always.
No, man, it's always great. We'll be doing many more talks, guys, updating you guys on because it's not just us talking about precious metals. We talk to you guys about what's going on in the financial world, too. So thank you so much for coming on, man. It's always great talking to you, Collin. Take it easy. Be safe.
Cool.
Later, guys.